the class, kids. Today, we're going to be going over an Accounting 220 topic, which is the balance sheet. Now everybody say it with me. Balance sheet. Balance sheet. Okay, guys, so we're going to jump right into it. And I have this amazing visual aid here that will show you guys throughout the performance, throughout the lesson, what you guys need to know. Okay, so our start point is the balance sheet. Remember the balance sheet we just talked about? So in the balance sheet, we have assets, liabilities, and stockholder equity. And that is what's shown on there so people can gauge your business. Every business puts out a balance sheet at the end of the year or quarterly, depending on the business, and that is how other investors and people can gauge the company. So let's real quick go on to assets. Assets, we have current assets, and then like long-term assets and the other assets. Then we also have total assets. So a current asset would be cash. A long-term asset would be land. You guys get that? One is liquid, we can use right away. One is long-term. That's assets. Liabilities. Liability, the definition, is something that you have future obligations with. Okay? So something like that would be accounts payable, which would be something that you have to pay later on. So that will show your investors how much money you have to pay in the long term. And your liabilities. Okay? And your stockholder equity, which is your common stock, and that's your stockholder equity and your liabilities added together. They add up to your assets, okay? So they should equal out in the balance sheet. And if that doesn't happen, we've got a big problem. And we've got to go back through and figure out what we did wrong. Okay, guys, so I know we covered a lot of stuff today, so I'm going to have one of my students come in and help us out. Okay, Katie, come on in. Hey, Katie.
Hey, Ray.
So what did you learn in our presentation today?
So much. I feel like I was in Accounting 220 with you.
Wow, that's crazy. Do you learn about the balance sheet and what's on it?
Heck yeah, assets, current liabilities, and stockholder equity.
Don't forget those long-term liabilities, though.
Oh, you're right.
I know. So, guys, this hasn't been long enough, so I'm going to keep... Okay, guys, while Katie's erasing what's on the board, we're going to transition into our subsection, not balance sheet, but how we get to on the balance sheet. And that's with journal entries and T-charts. Okay? So, real quick, I'm going to give you a quick overview of a debit and a credit. A debit is a debit, and a credit is a credit. So here we go. We have debits and credits. See that, guys? So what you do is you have your debits here, your credits here, and then whenever they get down here, whatever's bigger is what you have. That didn't work out at all. We're going to erase this again. There's going to have to be a lot of editing.
See, debits are always on the left, credits are always on the right.
So the first thing you're going to have to know is that debits are always on the left and credits are always on the right. Okay, guys, so we're going to do this. Debit, credit. You guys see that? So real quick, I'm going to erase this off. Now I'm going to have you guys tell me. Okay, we're going to draw this. Now what goes over here, guys?
Debits.
Oh my goodness, you guys are so good. Now what goes on this side over here?
Credits?
That's right. Great job. Smiley face. That's how we do a T-chart. And with all the T-charts, we get journal entries, and the journal entries end up on the balance sheet. And the balance sheet is one of three types of statements that we have. We have an income statement, a balance sheet, and a statement of retained earnings. And the balance sheet is the final one that we produce. So guys, we've learned about the balance sheet, T-charts, and just the statements that we have. I hope you guys learned a lot, and I hope you guys have a great rest of the day. 220 Topics out.